Most people believe their money is safe. But what if one day you walk up to an ATM to get cash for dinner? You slide your card in, you type your code, but the screen does not show your balance. Instead, it says, "System unavailable." You try another bank. The doors are locked. You open your phone app. White screen, no numbers. In that moment, something strange happens. You realize your money is not in your pocket. It is not in your house. It is trapped behind a digital wall. The world has not run out of food. There is still fuel in the tanks. The lights still work. But the system that moves value has just had a heart attack. And when the banking system fails, the world does not slowly decline. It freezes. But this is only the surface. To understand why your morning coffee depends on a global machine, we have to look inside the plumbing of the world. The chaos without banks. Without banks, there is no credit. Without credit, there is no trade. Grocery stores cannot pay suppliers. Suppliers cannot pay farmers. Truck drivers do not get paid. Fuel stations cannot unlock pumps because payment networks are dark. You see lines forming outside banks. No shouting at first, just silence, cold fear. Because money is not paper, money is access, and suddenly, access is gone. In 2008, the global financial system almost collapsed in a matter of days. Banks stopped trusting each other. Governments had to step in fast. If they had not, the freeze could have spread worldwide. But here is the dangerous part. Most of the money you think exists does not physically exist at all. How the system actually works. Banking is built on one thing: input. The input is your deposit. You think when you deposit $1,000, the bank puts it in a box with your name on it. They do not. The process is called fractional reserve banking. The bank keeps a small part, maybe 10%. The rest, it lends to someone else. To buy a house, to start a business, to purchase a car. That money gets spent. It goes into another bank, and that bank lends most of it again. This repeats again and again. The output? New money is created. Short question: did you know most money in the world exists because someone took a loan? It's not printed first, it's borrowed into existence. But here is where it gets deeper. Layer 2, the trust machine. Banks are not just vaults, they're the trust layer of society. When you swipe your card, your bank sends a message to another bank. Millions of these messages move every second across invisible networks. Your bank says, "The money is coming." The shop trusts the message. The shop gives you food. Later, the banks settle the debt between them. It's a massive feedback loop. Money moves, records update, balances adjust, all based on trust. Surprising fact, if everyone tried to withdraw their money at the same time, banks would run out of cash in minutes. Not because they are evil, but because the system is not designed for everyone to demand paper at once. It's designed for movement, not storage. But this is still not the deepest layer. Layer 3, the hidden insight. Banks do not just store wealth, they create liquidity. Liquidity is like oil inside an engine. It allows value to move smoothly. A farmer can borrow money today to buy seeds. He pays it back after harvest. If he cannot plant, he cannot eat. Banks are not warehouses of gold. They're time machines. They pull value from the future into the present. But here is the uncomfortable truth. The system works only if people believe it works. The weakness is the confidence loop. The banking system is built on a confidence loop. Money flows because people believe it will flow tomorrow. If trust breaks, the system does not slowly weaken, it snaps. This is called a bank run. If people believe a bank is unsafe, they rush to withdraw money. But the bank has lent most of that money out. It cannot return it instantly. The system does not fail because money disappears. It fails because belief disappears. And banks are connected. If one large bank fails, it stops paying others. Those banks feel pressure. Like dominoes, they begin to fall. What could trigger this? A massive cyber attack, a housing market crash, a political crisis, or simple panic spreading online. In a digital age, fear moves faster than trucks, and when trust runs out, the engine stops. The twist most people miss. Most people think governments print almost all the money. They do not. Private banks create around 90% of the money we use. Every time a bank approves a loan, it's not moving old money, it's creating new money, typing numbers into a computer. The system we depend on every day is not just public, it's a private engine running on public confidence, and this engine powers everything. Your salary, your rent, your groceries, your phone bill. If it stops, life does not slowly change, it stalls. The bigger picture. We think banks are buildings made of marble and steel, but the banking system is not concrete. It's a story, a global agreement. We all wake up, we all work, we all trade, because we believe the numbers in our accounts mean something. If banks collapse, the buildings remain, the computers remain, the people remain, but the story that connects us breaks. And without that story, trade stops, growth stops, movement stops. The banking system is not about money, it's about invisible threads of trust between strangers. Wealth is what we build, but the system is the faith that makes building possible. And that faith is more fragile than most people think.